Today I will take up problem number 9. Problem number 9, page 39 in the question booklet. Anil and Sunil are partners in a firm sharing profits in the ratio of 2:1. Their balance sheet as on 31/3/2016 was as follows. Look at the asset side: cash, debtors, stock, furniture, buildings, motor, car. Liabilities side: bills payable, creditors, reserve fund, and capitals of Anil and Sunil. Next, on 1/4/2016, they admitted Vimal for 1/4 share in the future profits under the following terms. There are 5 terms given here. First one, A, he should bring cash for capital 40,000 and 30,000 for goodwill. So capital also in cash, goodwill also is in the form of cash. The next is most important, B, half of the goodwill amount withdrawn by old partners. Underline the word half. Previous problems were the goodwill amount withdrawn. That is, the full amount was withdrawn. Here it is, half of the goodwill amount is withdrawn by the old partners. So the entry remains same, but the amount will change. This is the new thing in this problem compared to the old problems or previous problems. Next, buildings are revalued at 66,000 and make a provision for legal charges rupees 700. Next, D, stock and motor car be depreciated by 10% each. So stock also 10%, motor car also 10%. Next, provide provision for doubtful debts at 5% on debtors. So these are the adjustments. Most of it is known to you. So you can work further. Any questions is there, you can ask me. Otherwise, I'll move on for working. Page 40, problem number 9. So start with perform I am ready. I'll go for first revaluation account preparation. For that, I will take up the terms and conditions given there from C, D, E. I will take it up. All the 3 belongs to revaluation account. First one, buildings are revalued at 66,000. So let us see the balance sheet value. Balance sheet value is 56,000 here. So new value is 66,000. So building now present value is more. So I have to take it as increase in asset by buildings account 66,000 minus 56,000, 10,000 increase. Next, make a provision for legal charges 700. That means to be paid legal charges. So to provision for legal charges will be on the debit side, 700, increase in liability. Next, D, adjustment, stock and motor car be depreciated by 10% each. So stock also 10% less, motor car also 10% less. So stock 32,000 and motor car 10,000. We will take that to the debit side of revaluation account. That is connected to decrease of asset. So decrease of asset comes to debit side. To stock account, 32,000 value multiplied by 10 divided by 100. So 3,200 is the deduction. Next, to motor car account, 10% less. 10,000 into 10% is 1,000. Next adjustment. Provide provision for doubtful debts at 5% on debtors. So it is creation of provision for doubtful debts, the loss. So on debtors, we'll be calculating debtors value is 30,000 on that 5%. So 2 PDD, provision for doubtful debts on debtors, 30,000 into 5 by 100, 1,500 is the value. So check once again before proceed further. C adjustment we have taken, D adjustment we have taken, E adjustment we have taken. In C there are two parts, then D there are two parts, and provision for doubtful debts last one. It's totally 5 entries. So please check before you proceed further. Then total and balance, credit is more, 10,000 is credit. I'll take that to the debit to make it equal. So now 10,000 minus these 4 items, and we have to find the balance. Check once again. $3,600 is the balance that goes to old partners capital accounts. Old partners are Anil, 3,600 into 2 by 3. 2:3 is the ratio. 2,400.
1,400.
Yeah. And then Sunil, 3,600 into 1 by 3. 1,200. So this is basically revaluation profit because credit is more. And we have got it by balance amount, that is balancing the account. So this is the first thing we have to be very careful, double check before we proceed further. Next, we move on to the first adjustment that is connected to Vimal. Vimal has been admitted into business for 1/4 share. He should bring cash for capital 40,000. For that, we have to check in the balance sheet. Do we have cash or do we have bank? So we have here cash rupees 4,000. So cash account itself. So Vimal brings in cash for capital 40,000. So first entry for bringing the capital into the business, that is journal entry for capital brought in by new partner, okay, in cash. It is cash account debtor to Vimal's capital account. Cash is coming into business. Vimal is the giver. Vimal is a personal account, credit the giver. Then he also brings in rupees 30,000 for goodwill. See here, 30,000 for goodwill. That has to be taken in the next sentence. Then goodwill brought in cash by the new partner and withdrawn by old partners. So cash account debtors to Vimal's capital account. So that is for being amount brought in by new partner as goodwill, or we can take it as premium also. Next, Vimal's capital account data. Whatever the amount brought in by Vimal to be shared among the partners. So 30,000 is the amount brought in to be divided among partners in in 2:1 ratio. So that comes to 20,000 for Anil, to Anil's capital account 20,000 and Sunil's capital account 10,000. So please read, being goodwill 30,000 brought in by new partner, distributed among existing partners in their sacrifice ratio, that is 2:1. So we are dividing 30,000 into 2/3, 30,000 into 1/3. Next is most important, what we are just now read in the beginning. So let us see the adjustment B. Half of the goodwill amount withdrawn by the old partners, half of the amount, not the full amount. So here, being half of the goodwill amount withdrawn by the partners, half of the goodwill amount. See Anil here. What was the goodwill of Anil? 20,000 into half. So 10,000. Next, Sunil. He has got 10,000. Half of it, that is 5,000. So total amount withdrawn 15,000. So Anil's capital account data, Sunil's capital account data to cash account. Anil is the receiver, debit. Sunil is the receiver, debit to cash account. Cash is going out of the business. So instead of full amount, it is half amount here, half of the goodwill. Please look at it, be careful and try to understand the words which I am explaining to you. It is very, very important. So being half of the goodwill amount is withdrawn by the old partners. So that is what important for you to remember. Entry remains same, but the amount is not full amount. That it may be 30%, it may be 40%, it can be any amount, any percentage. So like that they may be giving. Next, we have to move on to the capital accounts of all the partners. I'm ready with the format. Anil, Sunil, and Vimal, three partners are there. So to start with combined capital account, first we have to go for balance sheet capitals of old partners. In balance sheet, we find Anil and Sunil 60,000 and 50,000. That becomes opening balance brought down. 60,000 and 50,000. Vimal has not entered into business yet. Next, we have to look into, do we have any reserve fund, general reserve? So here we have reserve fund 9,000. That reserve fund to be divided among old partners in ratio
2:1.
2:1, 6,000 and 3,000. Second step is done. The third step, we have to see in the balance sheet, do we have any profit and loss account? So no profit and loss account on liabilities side, no profit and loss account on the asset side. Third step is over. Coming to the fourth step, we have to check the revaluation account. What is the balance? Is a profit or loss? So when you look at it, you have revaluation profit here. So this is written as two old partners capital account. So 2 becomes by opposite entry. Remember 2,400 and 1,200. So by revaluation account, revaluation profit 2,400 for Anil, 1,200 for Sunil. This is very, very important for you to know. So these are the steps. I have left one line space also to make you understand the concept clearly. So after that revaluation account, next we have to go for next entry by cash account. Vimal is bringing in capital and goodwill. So capital account 40, goodwill account 30. So Vimal is getting in cash 70,000. Look at the column carefully. Vimal's account is 70,000. 40,000 for capital, 30,000 for goodwill. So this is the two entries what we have done here. That is cash to Vimal's capital and again cash to Vimal's capital. This is the entry. So these are taken here on the credit side, 40 and 30. Next is most important for you. The goodwill to be divided among the partners, whatever Vimal has given. So Vimal is getting 30,000 rupees, that to be divided in the ratio 2:1. Already we have done the division in the entry. That entry I am making here. By Vimal's capital account, that is connected here. Vimal's capital account debtor to Sunil's capital account. This entry comes both the sides. So one side I have made an entry that is for the Vimal's capital account debtor to Anil and Sunil. This has to go on to the debit side now. Vimal is giving 20,000 to Anil, and next is to Sunil's capital account. Vimal is giving to Sunil 10,000. So this has to be carefully understood and written by you. This is very, very important. So this 30,000 is given here to two persons from the Vimal's capital account debit, but for Anil it is a credit. For Sunil it is a credit because it is an addition to Anil's capital account and Sunil's capital account. So this is first two entries. Then is the last entry for goodwill withdrawn by old partners. Anil's capital account debtor, Sunil's capital account debtor to cash account. Half the goodwill amount we have to take it. So Anil's capital account and Sunil's capital account debit to cash account. So here half of goodwill amount withdrawn 10,000 and 5,000. As I told, entry, journal entry, you may not do it, no problem. But when you're entering in the ledger account, it has to be proper. How you remember is left to you actually. So you have to carefully see and remember. That's why I written some explanation for that so that easily you can understand. So credit is more for both the partners. Total carefully. This Total, take it to the debit side. Then balance each capital account. 88,400 minus 10,000 for Anil. 78,400. Then 64,200 minus 5,000.
59,200.
Good. Then 70,000 minus 30. Capital. That is the capital of the Vimal, because goodwill is given away. Only the capital amount will be left in his account. This has to be taken to as opening balance to opening balance brought down. Remember, this is the one very important from the exam point of view. This case, goodwill withdrawn, half or full, like that. Next, cash account. Cash account have an opening balance of 4,000. So asset shows debit balance 4,000 to opening balance brought down. Next is what the new partner gets in to new partner's capital account. So he's getting 40,000 plus 30,000. So total he's getting 70,000 to business. So all cash opposite entries. Next here, two cash is there, 10,000 and 5,000. That has to be taken onto the credit side here. $10,000 and 5,000 withdrawn. That is for the business, it is a payment by Anil's capital account, by Sunil's capital account. So like in dissolution, the same thing. Total and balance. $74 minus 15. Check once. 59,000 is the balance. So this 59,000 we have to take it here in the balance sheet. Date is 1/4. Cash 59,000. Then new balance sheet, cash I have taken. Next is debtors 30,000. Check and remember, do we have any reserve that we have created? PDD has been created for 5%. See, 1,500. We have created PDD 1,500 for debtors. That you have to remember, whichever adjustments are there. Next, stock. %10 less we have done. We should not use the word depreciation, even though they told us to take it as depreciation. Stock is a current asset, so we have to take it as a decrease. Next, after stock, furniture 8,000. Furniture do not have any adjustment, so outer column straight away 8,000. Next, buildings 56,000. Remember, buildings account value has been revalued 56,000. Add appreciation 10,000. So new value is 66,000. This is what given in the adjustment. This is the old balance. So 10,000 is the increase which we have taken on the revaluation account credit side. Next, motor car 10,000. We have an adjustment. Depreciation 10%, that is 1,000. So outer column 9,000. So asset side very easy to do, but you have to remember debtors may be troublesome usually. Yeah.
Sir, stock is 32,000.
Which one?
Stock is 32,000.
Decrease. Stock 32. Okay, 32. Okay, fine. So 32 minus 3, 29. Yeah, fine. Stock 32, furniture. Yeah, correct. Then bills payable and creditors. No adjustment on the liabilities side. So bills payable is 16,000 and 5,000. No adjustment, remember. Next, reserve fund. No, the reserve fund is closed. No need to make an entry. Then we have to go for capitals of all the three. But we have to take new values from the capital accounts. So 78,400 for the first partner. Next, 59,200 for the second partner. And for third partner, 40,000. So we have to take that balances over here. So balance sheet, we have revised completely. Everything is over. But I told you earlier also, all adjustments of revaluation should be there. So let us check now. Buildings is taken. Provision for legal charges not taken. So it is payable. Legal charges is payable. So that 700 is going to be a liability because it is payable. 700. Next, stock taken, motor car taken, PDD is also taken. So except the balance amount, that is profit or loss on revaluation, all adjustments to be should be there in the balance sheet, or you can check the adjustments. Whichever you are comfortable, you can check it out. So now we can go for totaling and check whether your answer is right or wrong.
Sir, 1,99,400.
Sir, it's 1,99,300.
300. We had to check once, but credit side we have only find the asset side we are finding only 500. Somewhere
Sir,
anything.
stock is 28,800 because
So,
it's minus 3,200.
Yeah, 1 second. 3,200. Yeah, correct. See. So
28,800.
Yeah, perfect. I think now it is going to be proper. So 1,99,300.
300.
Yeah, correct.